So we'll go ahead and start here. Let's take a quick look at foreign currencies. Let's go. Start with the Aussie dollar. Now this is from last week's setup here. So let's see what we got. Close this sign. It's hard to see everything around, especially when you're new to this. Uh, so what we do here on Brewing Trades podcast is we focus on giving you a location, a place to make the easiest decision for your trading. So we take small ranges of information that is accessible to you um, through this live program. So, for example, I am running uh, a couple of computers here, which the first one shows we're going over the 4-hour chart for the Aussie and the dollar currency pair. Now, this is going straight into a supply zone, which is an imbalance of normally a zone when it comes to supply and demand. It's an imbalance between sellers and buyers of a particular financial instrument. Now, this particular financial instrument happens to be a currency pair, which is between the Australian dollar and the US dollar. Now, the Australian dollar is the base currency, and the US dollar is the counter currency for this particular setup. Now, as you can see, the Aussie dollar is going down. It's currently going down on the 4-hour, and let's expand on this. Okay. So once this is actually for the week of last week's, say from the 14th, we'll have it right here. So let's start all the way from the beginning of the 14th at 00, and we'll do the same thing for the 18th, since it's the whole Monday through Friday. Let's do it that way. Monday through Friday. Set 18 at say 2000. Okay, so right here. Okay. So this is the whole setup here. Price was currently, when we did this chart last week, price was in this zone here. So let me see if I can, yeah, right here in this zone. Price was right around here. And we expected price to either go up or down, it doesn't matter, as long as it reaches a zone. Now, in our particular case, we always research the supply zone and demand zone of every time frame that we have access to. So for example, 4-hour would have a supply and demand zone, the nearest ones. Now, sometimes a supply zone or a demand zone may be weak or strong zone. Why do we say weak? Weak means that it's been tested and it has some issues with it. So it might break through. If it's been tested multiple times and it keeps pushing down, price is eating away or something like that, then you know that it's very possible that it will break through and go to a higher supply level. And within that time frame, for example, the 4-hour, maybe it's going to a daily supply level. We have to determine that. So we'll go through all that process as time progresses. Let me fix this camera right here. Bear with me. This is my very first real live stream, so I might have some technical difficulties, but we're gonna get through it. Let's see here. All right. Let's see. So, yes, and this is pretty much it right there. Okay, so looks like prices it's already been tested, so this wouldn't be accessible for us for its use again. I don't think it'll be smart to keep the same supply zone for this 4 hours. So the goal for today is to really figure out if there is another supply zone that this will be accessible with. Now, since this is the 4 hour, we will go in and we'll look at the normally I go in from the highest time zone that I think is feasible to work with, and then we will go down to the smallest one, or the smallest denominator that has a reasonable amount of pip movement. That is points in place movement for this particular currency pair. So this is the 4 hour. Let's go in to look at the daily. Daily. So we'll come in and work on this. And then I think the highest one that we can work with on the Aussie dollars way is right here. And this is a decent one. So let's look at monthly. Okay. So monthly tells us that from, price has pretty much been slow, and for every month has been going downward. The trend has been down. Now, this particular bottom here was 2019, if I'm not mistaken. Let me make sure. This right here. This right here was 2000, and actually 2020 March. So this is the March 2020 for when it hit rock bottom for this particular currency pair. That means the dollar was pretty much strong in this setup, and the Aussie was weak, right? So this particular movement back, and let me make sure I remove all this stuff here. There's no need for me to show trades or show any trade levels. There's no need for that. Volume is okay. Let's see what else can we show. Candles are all right. All right, let's keep everything as is. All right, so with this particular setup here, this was in March, right? So, okay, now don't need to have this anymore. We delete it. Delete. All right. Okay, so let me remove this now. Now, this process, of course, I'll refine it a whole lot better, but the goal here is just to show you something, right? If you have a higher time frame, it's always good to go in at least 3 different time frames that you can look at and speak to what the major trend is and what the secondary trend is, and then what you will be trading. So normally what I do is I normally look at my major trend being weekly. My daily is my intermediate or secondary trend. And then for I look at the 4 hour, and I'm talking about fractals here, sorry. So not to confuse you. Fractals are normally what I look for. So the week is split up. It looks the same. What a fractal is the same type of characteristics that you can find on either a higher or a smaller, like a snowflake. It has a smaller type of snowflake within it, and it looks similar to the major snowflake. The same thing goes around with charts. So with this time frame, we look and we see pretty much this major correction here. You have the impulse down and the correction. You've had small corrections going through, but this is for the monthly. So we know that we're currently on a monthly downtrend and we're sitting at a possible reactionary area because there was a trend up and this correction and then up again. And now we've reacted to that. Now we're possibly reacting downwards. We're still heading downwards unless this decides to get tested again. So we'll see. Let's go ahead and go to week. Okay. So from the weekly, if you look at it, this downtrend here, this shot down here. So I'll redraw this down. So if from here to there, that is still strong movement down. Now we're expecting this. It took as many days just to come up here, where it took about 2 weeks. So this was weekly. So 2 weeks down and 3 weeks to get back to the same level. So the rate of change or the rate going down is a lot stronger. So we still have that downtrend here, so you can really look at this as being tested. This is the second test with actually a little bit lower than that trough here, maintaining the downtrend. Okay, this peak here is not higher than that, so we still have say a lower high. So until this peak is broken, and this peak is broken, you're not expecting any trend change on this particular downtrend right now. Now this is basically saying that the dollar is still as strong. Now there's also different things that we can look at. You can, when it comes to supply and demand, you can read the dollar charts or say the dollar index and compare it for known levels and all that, but that's a little bit later. We're just looking and reading these charts right now, and then we can go back and refer to the chart there. So let's see what we got here. Actually, don't like where, I mean, it looks like it's getting reacting down now. This was the setup here that we had for last week. Let's go in and look at possible supply. Now I'll have to be changing my this here looks like weekly supply in this particular range here. Now, I could refer to my other information here, so let me see what I got. So for the Aussie weekly, if I can bring this other slide up. Okay. So let's see here. So for the Aussie weekly, I did choose up here as a good weekly because of the strong drop down. Now, as we can see, it's not really that great anywhere near. So for example, this is, let's say, think of it as a double bottom, right? So you have a double bottom. So if you've ever heard the term double top, this is similar to that. This will be a double bottom. Now, if you have a double bottom and it still looks like it's reacting off of this level here, these two levels, this is the first one that's been broken, or at least taken care of, and now it's reacting off of this area here. Now that looks like the strong demand zone is right below. Okay, and it hasn't been tested. So let me go back. It hasn't been tested at all. And we're currently still in the downtrend for the weekly. Now I'm taking a lot of time here because I just see it as not being tested. So for the next few weeks, price is probably going to stay in this region. Now, of course, there are external factors that might affect the market, and that may include political, regulatory, and all that. But we currently just look at what price is telling us, and where price goes, we just bounce between. So supply and demand, just pay attention to what's actually happening on the ground level. So let's see here. This is weekly. Now I have this labeled as 0.67764. We're not anywhere near that right now. What do you call it? The supply level up above is in 0.76796 to 0.77841. We're not nowhere near that. We're straight in the middle. So for weeklies, we're not looking at a major trend change or on that, right? So we'll leave that alone. But it's good to know where price is headed. It's bouncing in between, of course, but the dollar is strengthening, especially during times of war or during times of any kind of uncertainty. The dollar becomes an active player, whether it's going against it or for it. So we have to pay attention to things like that. We'll see how this goes. All right, so let's go ahead and look at the daily supply. Now, daily supply, I chose a higher point or a set of points away from the action that was taking place, and this was as of last week. So as you can see, price is currently, if we go back to the chart, let me go switch back. So that was, so as you can see, price has gone all the way back in, right there. So price has crept up, right? Now it's gotten into my 4 hour level, okay? So, and this was the price that we currently have. We'll say 0.7387, so 0.7387, which is right about here. 387. I'm even soon of this. Get this right. Just so we give it some context here. And I'm going to change the color of this particular let's see, setup here. This is on the weekly. So actually, let me go ahead and get out of weekly. Let's go to daily. So it's easier to pay attention to. And put the right here. 0.7387, 0.73877. Let's make sure. All right. Sorry about that. Just putting a little bit of music in the background. You guys don't mind. Just to get the mood going, so to speak. While I'm prepping, it's always good to have something that gets you focused, yeah. So you can get into it. All right, so this is, I'm using the dark orange, and this would be for this particular soda here. So 73877. And that should be 0.74378. So just right about this area. And why did I choose this? All right. So interesting. Interestingly, I am fixing this camera now. Looks like I'm okay. I'm a little. This is a lot of fun. Let's see what we got. All right, cool. All right, let's keep on trucking. Let's see how we do this. Okay. So, let's see how we do this. We got. Okay, we were doing the other portion of it. That's backspace. 76796. And that was the other side of it. So always try to save your information so you can always get back to it. So you can save your profile info. It always helps. So save. Okay. Now for our purposes here, price is currently trading in this area, and we have other currencies to monitor. So we'll go ahead and vacate this section here. Now, there's no need for us to change these upper supply levels at all for what they were from last week because price hasn't reached into it. Now, for this particular one, now this price has been touched. So we have to make sure that in reference to these other setups, we have to be able to determine what price is doing at a 4-hour level and what is a good location to trade in between, because price may not come up to this daily level because it is probably still continuing its downward trend, but it will have some correction in between. Now, as traders, that's the focus of our setup, right? To trade in between those levels. Now, we can go down to the 4-hour level, and we can remove this. Okay, so in 4 hours, even though this is a strong setup going in, price, the last time price got into this zone, it breached it, right? So the first time it touched the zone, it came in and was on the 10th. So this is the 9th. And now this is looking at here, this is the 10th. Okay. No, that's still the 9th. All right, so right here, price has been playing around, going back in, but it did not just only touch the zone. It went through and worked on this doji over here. So there's a strong move down. So this zone, our zone, was a weak one to begin with. We're being fair. So now this particular zone here is the new setup that we should be actively pursuing if the price is to come back into. So this doji actually reacts off of this setup here, and we're going to make sure that we take care of that. So let's go ahead and make those adjustments. Now, someone will say, well, it's a 4-hour, why are you taking? It's always possible for price to breach, right? Price breaches at a lower level because this movement that's going on is a stronger movement. So Australian dollar versus the US dollar, what are the commodities? We're talking about oil, right? So what's affecting the world now? A possible war. Price is moving in a certain direction. So you have to pay attention to things like that. Now, with my adjustment here, what am I looking for? This particular doji has not been touched, right? If we look at it, it hasn't been touched. The price movement is aggressively strong for 2 days, or should I say two 4-hour sessions, right? So from the doji changing, the imbalance being that the sellers, right, the sellers of the Australian dollar are ever so aggressive in this position. At first, they went down, they pushed it the first time, and then when the price slowly got back up, they pushed it down, right? There was just too much dollar strength, US dollar strength to go against it. So I'm making this adjustment now. Actually, let me go ahead and make sure I send to my friends here so they can come in. All right. Settings. All right, can you hear me? All right, can you hear me? Can you hear me? How's it going? Can you hear me? All right, can you hear me? Can you hear me? How's it going? Can you hear me? back. We are back. We are back. Okay. So pretty much had a little issue. Let's move this out of here. Don't need that. Okay. Let's see what we got here. All right. So, like we talked about earlier with this particular level, it is. Let's see here. We got the big doji there with the strong drop. And then there's this retracement that comes in on that 4 hour there, right? So if we look at this setup here, this is particular 0.72550 to 0.72962. This is the setup here that you can definitely, how you say, take that as a supply level on the 4 hour if price decides to come up. Now, this high was broken with this particular move here. Okay. So I anticipate price to maintain a move up, until if it decides to go down. But with this setup here, remember we were in the previous supply here, which has already been tested. Now it's headed on this way down, and that's a strong move down, right? Now that means that price can possibly go down to the nearest demand, which I anticipate to be in this region here. Now, before we make a new demand, let's look at what we previously had. We had our demand set up for a daily demand and let's see, 4 hour supply. Let's look at that. The demand originally was 0.66112 and 0.66902. So let me go ahead and shut up. If we look at it, let's go ahead and expand through that region. Let's go. Let me go ahead and close out this one. Strong particular setup here. Just gonna put the demand zone. As I can see, there's no space here. It's been used, so we're not anticipating a move there. Let me expand on that right here. The strongest move that is close by is right here. I always try to read off of the slowest. There was nothing if you refer to the other setup, right? So the closest closest 4 hour I could see that is clean, as clean, is this particular setup here. Make sure I change that to the property so it's not referred to as a weekly zone. So we go to yellow, as we always proceed with caution here. Now, this is the closest I can see, but that doesn't mean it's the cleanest. Okay. It is not clean. And when I say that, let's go ahead and zoom out. And then on the floor, it's hard to, if we scroll over all the way back here. Now ignore volume for a second. Let's turn the volume off just so that we can see what's going on. See, that particular zone has been touched before. Okay. Let's see now that is the setup here. This is the area of retention. So let's see. Let's load up again. As you can see, price did zoom out of it. This is the zone where the price retreated to. Now, this, if you were reading this prior, most people would look at this area here, this particular area here, this zone here, this particular area here. People would say, okay, that's a rise, a strength, and then there's a takeoff once this particular pivot was broken. Right? It busted out of it, and then price never returned until it continued on for the longest time, and the price touched it, and then boom, it comes back out again because there's an imbalance, right? So this zone is a weak zone. This particular zone we just left here is a weak zone. Definitely not as strong because it's been tested and tested. Now let's go back. Look at their retracement in into. Even though price came down close to it, the next time price actually came closer, it just busted through, and then price just zoomed out. Now price has retreated up, has gone up. Let's minimize this. Okay. Price has gone through its changes, blah, 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 coming down. Now look, this is the downtrend or the major trend, and that was its secondary trend, right? And now there's the double, how do you say, double bottom on the 4 hour, right? And we're currently looking at a possible trend, right? Change. This is up, down. I don't know if it's going to maintain it on that, but 4 hour, it's already in the middle of it. Chances are price can get lower if it decides to go. But we're not there yet, and none of those areas have been reached. So that is the closest one I can look at and say that that's an okay zone. But it's not the cleanest. It's not the cleanest by any long shot. We have the demand zone. If price comes into it, I say do a 1:1. That is the expectation. If you're 1:1, means that you have one range that you're risking, and then you are looking for a price to go a certain way and gain that same amount. So 1:1, 2:1, as your what do you call it? Your return on the investment that you're risking. Okay, so that means do not for trend is still down with right now a sideways happening in between. Okay, so expect that price might continue on downwards eventually because we're not too high on the curve, so to speak. All right, let's go in and look at. I'm going to maintain the other supply and demand zones because it's taking too long just to go over this particular one. We're going to go ahead and go to our second setup here. That'll be the euro dollar. Now, this was a perfect setup for us for the euro dollar. We had a clean break and set up that zone. And once that clean break happened, we waited for price to get into the particular setup. So as let's look at what we have here. So I'll share my screen with you. So this is the Euro Weekly, and as you can see, weekly supply has a strong move out of that particular reaction point, and price is nowhere near that right now. And we have a downtrend that's with a slight retracement. Now this was at the beginning of the week, so February 10th-ish is when I made this chart. Let's look at the expected demand zone for the weekly. And as you can see, there's a similar setup of strong move out, and with the expectation of price, if price reaches it, there will be a very nice bounce up of 1:2 or 1:3 return on investment there, if you do choose to go by it. The other setup as well is the daily. So his daily has a strong move in between those zones, and you can see that with the doji and the the strong drop all the way down, and then the tiresome movements of the day to catch up to where it was. Now, as you know, this price worked its magic over there. Once price returns to that that big drop, and then there's these small candles here. That's always a great location for a good return, right? So good zone, so to speak. And that always, if you have a drop and then there's a sideways trend or a basing, and then there's another drop following, you got price returning to that zone, and then a very good downtrend follows, which is always very yielding. That was actually 1:5 or so for that zone. Now, if you look at it, price has already come back up with a slight move up above that. It's actually, I wouldn't say above, just about, but it's right in that zone. But as you can see, price is not moving away strongly anymore. Price is staying in that zone. And you can talk about external factors affecting the euro and the dollar and all that. What news does is it moves price from one zone to another. Regardless about the only thing that can really affect us more is the impact of that particular news or event. So when that happens, most of the time, especially if it's very significant, it will happen on a higher time frame. So for example, the move would be a daily move or a weekly, and that will gain a lot more when it comes to that. So let's see what this is. So price, we expect price to come all the way back into this particular zone here. It should shoot up if the euro decides to go up a little. But right now, the dollar is strong, the euro there's a little uncertainty there, especially with external pressure. People might be leaving the euro and putting it into safe havens. So, you know, safe haven being a currency or a commodity that will absorb stressful assets or something like that. Think of it as in times of war, a place where you can put your assets. Gold is one big one. Another one is the what you call Japanese yen. It's a good safe haven for a lot of people. The Swiss franc used to be a very good one until the unpegging in 2016, I believe January or of 2016, if I'm not mistaken. And that was really, really strong move. Once they made an announcement talking about the opposite, and actually they did the opposite. Uh, it was beautiful to watch because I was learning how to do this stuff at the time. But it was not a good sight or a good thing for the currency. Okay, let's go in. Let's see what we have here. So this is the daily supply. Let's look at the demand. Of course, strong move from that region. That looks like a cleaner move than most. All the way down in there in that section here. There's basically, if you're looking to get in, you probably look at the top of that range here. Like right here, right above, is a good way to get in. Because if price does get back in, it's possible that it might really respond. But it all depends on how strong the sellers are when it comes to that. So this is one big zone, and this was as of last week. It still hasn't been broken, so it's a good thing to just monitor it right now. And this is the 4 hour. So the 4 hour setup for US dollar. As you will see, we have already gone into the demand over here. And we currently will be looking to, it's that noise. It sounds like a bunch of notifications coming through. I apologize for that. Let's see here. That's probably the settings. I'll just have to suffer that for now. Apologies, notifications. Let's see. Yeah, that is annoying. Okay, I think I'll have to edit that out. Let's see here. Okay. So like I was saying, the demand has been already out here. As you can see, price has already come through. Touched it, gone out of it. The 2:1 return on investment is possible. And let's go ahead and scroll over to this particular setup so you can see it. So go on to camera 2 there. And there you go. So right there is the setup we're talking about. That is the demand that got, what do you call it? Touched there. It got breached. So as you can see, price did not, what do you call it, escape. Because this doji setup here is definitely a good way to anticipate this move here. You have actually, basically, you can look at it as a slowing down as price arrives into this particular zone because we had the strong move out, and then of course price again slowly coming back in. Oh, I would say there's a nice move down, and then up here we have this, and then slowly we after take basically breaking, slowing down, and then deciding to reverse course. Now we never really talk about turns in the market. We focus on selecting a good zone. If you have a good zone, your entries are a lot better. You don't just jump in the market, right? You anticipate a good move into it and then you exit. All right, looks like my chart is just flying high. Okay, let's see what's up. What's this? Don't fail me now. I think my internet is acting up, but we'll try again. See if I can refresh this. Okay, there we are. It looks like we're back. Okay, good deal. And so let's see here. So if we were to, let's see how much. If you were to choose this particular doji, or even this one, and anticipate that, okay, I'm in the zone, and you were getting in on this particular setup here. So from here to the zone that we selected, plus your possible stop. Let's say your stop was here or here. Say right here. If you decide to be conservative, this is 51 pips for 4 hours. I mean, for a lot of people, that might be, very stressful because they cannot make that match, right? But if you're about 50 pips in, if you're selected here at this particular end and not in the middle, then your anticipated amount, if you were to go 1:1, will be right in here. So that's about 63, 65, until the anticipated strong drop, right? So right now here, that's about 72. So it's a little bit above 1 if you were to take that big of a risk. Now, if you were to choose somewhere in the middle of the range, plus your anticipated stop here, that's about 40 pips. Now, your possible gain would have been around the same there, but this one you have around 90 pips. So with the 90 pips versus 40, right? So that is a 9:4, right? Gaining 9 by putting 4. That is 2.125, right? 2.25. Okay. That's 225% of the amount that you put at risk. then you're out. Remember, it's a downtrend. So you see these big candles that are coming down. You don't have to play along. Just make your pips and down. Price is getting tested again here before it might possibly go back up or it might reach through. My guess is there's more strength to go. Now, let's look at what we have here for the daily. What is going to look like? So basically, I don't know. And let me zoom out. We're low on the curve. We are really low on the curve for that particular setup. But we are just playing around this area here. Okay. Let's see here. Let's go back out. Chances are the price will be tested and it will range back in or go back out. Okay. Let's go back into the 4 hour and look at the supply zone that was anticipated last time. Some people would say, why is that such a big zone, right? What I can say is that this region here, the reason why I chose that wide of a zone is because there are two zones that are sitting on top. You have this particular zone here, which is a clean zone. And you have this tested zone, which is right below it. Now, this tested zone looks like it's been breached already. So there's no need to take this, okay? Now, where am I reading this chart from? I'm reading it from this move down. And then there was a retracement of about 61.8-ish of that particular drop. Okay. And then there's a continued drop here, but then it looks like it's a possible trend change, but we don't know yet. Okay, that looks like a higher high above this, so but we're not worried about that. We're worried about making money here. So pay attention to this particular drop here above this when price beats this setup here. This original what do you call it, demand zone gets broken. Once that got broken, price. That's still a clean zone. Clean zone. All right, so that will be updated as well. Let's look at that. Let's go in to the daily. Now let me remove this. No need for Fibonacci. You can just have it as a enhancer. All right. So let's see. Once price comes in, let's see what it looks like here. Now, of course, there are different things that you can do when it comes to having all this out here, right? You don't have to have tools, so many tools on your screen when you're reading the chart. You can use that to enhance your entries. Yes, it can help you, but you have to understand what price is doing to begin with. If you go in with the tool and you're automatically adjusting to the tool, you might forsake something, right? So you might not pay attention to a certain thing that's happening with the chart. So go in clean first, remove all distractions, and just pay attention to what might happen, and then use the tools to improve the location. Okay. You always have to improve the locations after you've read the chart. Okay. So just like we said, that was, let me go ahead, we just did this is daily now. Let me go ahead and select this. Okay. I was wondering where my mind went. Okay, well, what's happening? Okay, so if we go back in, let's look at All right, that looks like I'm back with that camera. Okay, go in file, go to profile, and say, why am I doing this? If you're using kind of MetaTrader or something like that, it's always good to pay attention to this setup here, where price is coming into a zone and all that. It's easy to read with MT5, of course, is the newest, latest, and greatest from MetaTrader. Now, some other traders might still be using MT4. You have plenty of tools with MT4, and I love MT4. The reason why I'm showing you MT5 is that with all these different tools, I like to see, I practice as I go with it to get familiar with different tool set or the way different programming that is coming through with it. But like I told you earlier, I tend to start from a blank screen. When I say blank screen, the only thing that will be on there will be the chart itself, the candles. I like to use the candles, and if you need to see it in a different form, you can change it yourself. But the goal is to think about price and what it's doing, and then we can go from there. So we've done the weekly, we've done the daily, and we've done the 4-hour for the euro, US dollar, and we'll make sure to show this information later. All right. So our goal now is to continue on with the next one, and that is the pound and the dollar. Okay. Now, let me go ahead and store the weekly what I have here. With the weekly, we basically had price. We we have the downtrend in play, right? Now, with this downtrend, there was a correction on that downtrend, right? Of course, the overall trend was what? Was uptrend with a correction. Right? Yeah, the weekly uptrend, and we were in its correction, right? Which means that this is a possible continuation up to this zone on the weekly, right? Before it might possibly come down. You can think of this as a retest of this particular high, right? This retest here, and then price continue downward. Well, price might come back into it, and we haven't seen that yet because this trend is still down. Now, this zone here, or I should say this pivot, hasn't been tested. So there's not a low. There's no lower high. This is still a higher high, a higher low here. So it means that the uptrend overall is still in play. But on the weekly, we're currently in the secondary. We're in that secondary. Price might come back in because the pound is normally stronger against the dollar sometimes this year. And let's also look and see. And we'll pay attention to other factors there. So let's look at the daily. As you can see, you have the daily where, well, it's pretty much no change in that, right? Let's see. That is 138,650. And 137,815. 137,815. So let's go ahead and look at that one.